Chainlink USD just triggered a long read on the overnight scan. Before I show you the entry, I want you to see exactly why. Evidence first, trade last. Before we start, one tap on like, one on subscribe, and share this with a trading friend. Costs nothing, helps a lot. The plan for the next few minutes: retail signals, institutional footprints, then entry, target, and stop. Evidence stacks in that order. Let's go. Straight to the chart. Daily candles. The last 60 bars. Price action is in an uptrend of moderate strength. That's our primary directional bias right out of the gate. You can see the dotted lines on the chart. Green is our TP at $10.45. Red is our SL share at $9.10. Those are the two numbers that matter most in this whole video. Now this is the fun part. The pattern detector picked up 3 chart patterns on the daily: double top, double bottom, ascending triangle. I'm going to walk you through each one in the next slides and show you exactly where they formed on the price action. Pay attention to the labeled points. Those are the swings that confirm the pattern is real. New here? This breakdown happens every day. Subscribe. Then let's get into the structure. Pattern number 1. This is the double top. It's a bearish formation with 2 out of 3 strength. 2 peaks, low chain 14,028, measured move target 11,067. You can see on the chart exactly where the key swings line up. That's what confirms the structure, not just my word for it. The textbook measured move projection is plus 24.1%. That's the typical rally once the pattern fully completes. It's a guide, not a guarantee, so we still need our SL in place. Pattern number 2, this is the double bottom. It's a bullish formation with 2 out of 3 strength. 2 troughs were 7.02. Measured move target 9.25. You can see on the chart exactly where the key swings line up. That's what confirms the structure, not just my word for it. The textbook measured move projection is 1.4%. That's the typical decline once the pattern fully completes. It's a guide, not a guarantee, so we still need our SL in place. Pattern number 3. This is the ascending triangle. It's a bullish formation with 2 out of 3 strength. Flat resistance 8.74 with rising support. Breakout, upward expected. You can see on the chart exactly where the key swings line up. That's what confirms the structure, not just my word for it. The textbook measured move projection is plus 111.4%. That's the typical rally once the pattern fully completes. It's a guide, not a guarantee. So we still need our SL in place. Support and resistance next. Because a signal without levels is just an opinion. On this slide, you've got 2 resistance levels above price, 2 support levels below, plus our TP and SL inside that range. If price breaks above R1 cleanly and holds it, that's the green light for the upside scenario. If it cracks below S1 instead, the long thesis is broken and you stand aside. The TP and SL aren't arbitrary numbers. They sit at logical inflection points, which is why this map matters more than any single indicator. On to the indicators. We've got composite score of plus 0.33, technical plus 0.40. Positive numbers lean bullish, negative numbers lean bearish. And what you're really looking for is agreement across multiple boxes, not just one indicator screaming. ADX is at 24, and that tells us we're in a moderate trend regime. Important because some strategies only work when ADX is above 25. On-balance volume is bullish. That's a sneaky good way to spot whether the smart money is buying or selling underneath the price action. Quick gear change. The chart told us what retail sees. Now let's find out what smart money is actually doing. Order blocks, fair value gaps, the institutional read. On the daily chart, the SMC bias is bullish, with an uptrend market structure. The most recent order block is a bearish zone between 8.26 and 8.52. That's where institutional orders are likely parked. We've also got an unfilled bullish fair value gap between 9.00 and 9.30. Price tends to revisit these imbalances. Most importantly, we just had a bullish move at $7.90. a key structural signal that smart money traders watch closely. Next up, volume profile. It shows where the heaviest trading happened, and those prices act like magnets. The point of control, the most traded price, is at $9.15. The value area runs from 7.72 on the low side to 10.61 on the high side, meaning 70% of all volume traded inside that zone. The signal here is bullish. Price 938 is above POC, $9.16, and inside the value area, 772, 10.61. Bullish lean. Order flow time. Net pressure from the last stretch of candles, buyers versus sellers. Over the recent window, buying pressure accounts for 62% of volume versus 38% selling. The overall flow signal is bullish. And to round out the indicator suite, 3 more advanced reads. Money Flow Index, the volume-weighted RSI, reads 79, signal neutral. Williams %R is at 20, neutral. Chaikin Money Flow reads low 14, bullish. Together, these 3 confirm whether the volume's actually backing the price move or whether it's just speculative noise. Quick context. Over the last 5 sessions, this pair moved 8.23%, and over 20 sessions, 11.38%. That tells you whether momentum is fresh and extendable or stretched and due for a pullback. Zooming out for a second, let's talk macro. On this slide, you've got the primary trend, its strength, the ADX number, and the volatility regime measured as ATR%. Here's the thing. A setup that looks textbook in isolation can totally fail if the broader regime is fighting it. So you want to ask, is this trade swimming with the market current or against it? The 5-day and 20-day moves at the bottom answer that. News and sentiment are mixed right now. No dominant story pulling price one way or the other. When that happens, we just lean on the chart and trust the levels we drew earlier. The full plan is almost here. Before it lands, subscribe, and tomorrow's chart comes to you. Risk management next, the only edge you fully control. On screen, you see the dollar risk per share, the dollar reward per share, and a position sizing table built around the 1% rule. The rule is dead simple. Never risk more than 1% of your total account on a single trade. So if you've got a $10,000 account, you're risking $100 max. And that decides the share count, not your gut feel. Get this right and you can be wrong 10 times in a row and still be in the game. Get it wrong and one bad trade can take you out. Everything stacked, now the levels. Bias is long. We'd look to enter near $9.50. Take profit sits at $10.45. Stop loss at $9.10. That puts us at 2.36 to 1 risk to reward, meaning for every dollar we put at risk, we stand to make 2.36. Horizon is roughly 5D. That's the play. One more time, this is educational, not financial advice. Markets are risky. Trade your own plan, never risk what you can't afford to lose. Drop a comment, taking this trade or passing? And subscribe for tomorrow's chart. So zoom out for a second. What we just walked through on LINK-USD, that's a long bias setup projecting roughly 10.0% from here. And here's why it matters. Every piece we looked at, the chart structure, the candle confirmation, the indicators, the institutional order blocks, the volume profile, the order flow, they all stack in the same direction. When you see that kind of multi-factor agreement, that's when the highest conviction trades happen. Now, here's what you do next. If this breakdown earned its spot in your feed today, smash the like button. It actually moves the needle on whether YouTube shows you the next one. Drop a comment with the ticker you want next. I read everyone. Trade safe. See you tomorrow. Tomorrow morning, the AI scans the entire market again, and I drop a fresh breakdown on whichever ticker ranks highest. Could be a stock, could be crypto. Join the channel and turn on the bell. That way tomorrow's video actually reaches you. See you in the morning.